Hey everybody, today is May 16th, 2023, and today we're going to talk about the stock market. We're going to talk about the debt ceiling crisis that is going to be a problem within the next couple of weeks if it's not resolved, and what effect that could have on the stock market. Before we begin, please read the disclaimer and you can pause this video if you read it. Okay, so in our last couple of videos, we talked about how we've basically been trapped between 3,800 and 4,200 on SPY, right? On the S&P. So this is SPY, the ETF that tracks the S&P 500. So let's look at the S&P, right? So we've been trapped within this range for a year. And every time we hit these resistance or support levels, we tend to have a bounce. In the beginning, there was a lot of volatility, right? And we would kind of overshoot or on both sides. There would be deviations from the range, but so now this range has basically tightened. And we also said that we are forming a potential ascending triangle, right? So we've had higher lows from the October lows last year, and we potentially can form an ascending triangle that could break out of this range, but we still are having trouble breaking above the 4,200 resistance level. And this has been a resistance level we've been talking about for like the last 2 months, right? And so we're basically just going flat at this point. Last week we had the CPI report, which came in expected, so the market didn't really react that much. And so we're basically just going flat basically for the last month, right? I also talked about how I can potentially see the market pull back a little bit. As long as we hold higher highs, it should be fine, right? It could be a healthy pullback, right? We also have some gaps here we haven't filled, and these moving averages, the blue being the 200-day moving average. So I can see it coming down, and these moving averages should hold as support, right? And so what could be the catalyst for that? The catalyst could be this, right? The debt ceiling crisis that we're having right now. Congress needs to raise the debt ceiling sometime in January, because then we might default on our loans, right? And this is basically political theater, right? You have the left and the right basically holding this hostage, trying to get their agendas passed, and so this is very common. Like, they'll do this political theater circus act and just really scare a lot of U.S. citizens who are going to be on the receiving end of the penalties if the debt ceiling isn't raised, right? And so just give me a second. Okay. So yeah, they're basically saying how yeah, we really need to raise the ceiling, otherwise there could be devastating consequences, right? But for now, the market doesn't seem to be pricing that in. So as you can see, that the sentiment is still in the greed zone, right? So we could potentially, if we're able to resolve the debt ceiling crisis within the next few weeks, we could actually see the market volatility spike up, right? And the market volatility is by no means like in overbought zone, right? Where there's still a lot of room to the upside, right? And so that could put a lot of potential downward pressure. So that's just something to be aware of. If the debt ceiling is not resolved, last time we had a debt ceiling crisis that could potentially be this bad was in 2011. And in 2011, we had a lot of volatility, right, over here. Right. Ultimately, that was resolved, but it was also at the last minute. So we could see some volatility potentially. So we could see it coming down. But of course, the most important thing is we want to see the higher lows that we formed in October holding, right? So yeah, so not much else to talk about today. We haven't really had much to talk about over the last month. We've had pretty as expected CPI and as expected 25 basis point rise in the last Fed meeting. Now the question is the Fed's going to raise rates anymore, right? I think that there is a chance they may raise 25 more basis points, but now that the terminal rate is over 5%, like I said, once they get it over 5%, there is a higher chance that they're going to pause, right? I'm not sure, and I don't think it's likely that they're going to start cutting rates, but I think they'll at least have a good chance of pausing in the next meeting. But for now, I think the main narrative, besides the rate hikes, besides the inflation data, is the debt ceiling crisis, which Janet Yellen just said that if we don't resolve this by June 1st, they can run out of money to pay off their obligations, right? So that could be a problem in the next few weeks. So that's going to be the major catalyst, the main narrative driving the market. And just to summarize, I think that this market could still be potentially forming a ascending triangle. And as long as we hold these lows, right, these higher lows, if the market does pull back because of the debt ceiling crisis, we want to see these moving averages, like I said, hold as support, and also these gaps fill, right, coming down. And that could be, a potentially good buying opportunity. But if we start to come down and retest this Fibonacci support level, which is coincidentally also the 3,800 support level, right, and also the last swing low that we made here back in March. If we're not able to hold that and we go down lower, then we're technically going to start making lower lows, and that's going to be bad, right? We don't want to see that in a bull market, right? It potentially, because we were in a bear market last year, we want to see, and now we're in a sideways market, and we want to see this market turn into a bull market, and we don't necessarily have the confirmation until we break and at least take out this swing higher right here, and then go up and challenge the previous all-time high, right? But for now, we got to look at the shorter-term picture and at least see if we can defend these support levels ahead of a potentially volatile next few weeks surrounding the debt ceiling crisis, and so we'll have to see what Congress does, and I'll definitely update you with charts and videos. And that's it for today. Not much to say except to see what Congress does over the next couple of weeks. If you found this video helpful, informative, please like this video, leave a comment below, and subscribe for updates. I appreciate all your support. Thank you again, and have a great day.